This is the second half of Chapter 6, Self-Employment. We're going to talk about transportation and travel. Ordinary and necessary travel expenses are deductible. When they're referring to transportation, they are referring to expenses of getting from one workplace to another workplace within the taxpayer's home area. When they refer to travel, it means refer to travel away from the home that requires an overnight stay. For transportation to be deductible, it must be getting from one workplace to another. So if I have a second job, my transportation, now we're talking about self-employment, so if I'm getting from one workplace to another, so if I'm at a location in Chicopee and I need to go to Holyoke, then the transportation between Chicopee and Holyoke would be deductible. Also, visiting clients and customers and a business meeting away from the taxpayer's regular workplace. Also, getting from your home to a temporary workplace. So if I've been temporarily assigned to Boston, but I normally meet in Springfield, my transportation to Boston would be deductible. Transportation between home office and a temporary work location is deductible. Now, when we're talking about automobile expenses, the standard mileage rate for 2012 is 55 cents. Actual expenses are the actual business auto costs that are deducted. So in the very first year, you will choose actual or standard. If you don't choose standard, then you can't ever use standard mileage in the first year. If you choose actual, it would be depreciation, gas, repairs, oil changes, that. If you choose standard, you don't calculate all that, you track your mileage. Actual expenses usually gives a larger deduction, but requires more record keeping. Travel costs for business. This requires an overnight stay. So if I have to go to West Virginia and stay for 3 nights, for business, that would be travel. So travel, meals, and lodging and other incidentals expenses are allowed. It should last no more than 1 year. Can't call it travel if it lasts more than 1 year. Limitations exist if the trip is partially for business, or partially for personal, or if there is lavish or extravagant expenditures. I'm going to a tax conference in San Diego. I'm going to be there for a week, and then I'm going to stay 3 extra days and sightsee. My stay for those 3 extra days and sightseeing is not deductible. Meals and entertainment. Business meals costs are deductible, but limited to 50%. So if I spent $2,000 on meals for my business this year, only 50% would be deductible in the tax return. Must be directly related or associated with business. So if I'm meeting a client and we are reviewing their tax return and they're signing it and we're having coffee, deductible. If I'm meeting a friend and we're having food but we are not talking about business, not deductible. Standard meal per diem is $46 per day, but can be higher in higher cost areas. You would look this up in the publication. Also, the meals and entertainment cannot be lavish or extravagant. I cannot have $1,000 dinner when I would only make, $50 off selling the person something. Can a taxpayer take depreciation on a business auto and use the standard mileage rate at the same time? That's false. Transportation costs are allowed when the taxpayer visits a client. Only when the taxpayer visits a client. Shouldn't be only. A deduction is allowed for meals, lodging, and other incidentals when a taxpayer travels away from home requiring sleep. That is correct. So, a taxpayer can deduct $46 per day in meals and incidentals and $77 a day for lodging without keeping receipts on a business trip. This is subject to 50% limitation. Taking 5 clients to a Major League Baseball game immediately following a substantial business discussion is deductible up to 50% of the cost, meals and entertainment. So business use of the home. If I'm going to work out of my home, then I could use business use of my home. And business use of your home is deductible if the business is exclusive, regular, and for the taxpayer's trade or business. A specific area of the home must be used only for business. Employees must be for the convenience of the employer. So if I have an employee working at my home, it must be for the convenience of me. So, and this refers to if you're going to use business use of the home, if you're a W-2 employee, if your employer has you work from home because they have no office space, and it's for their convenience, they don't want to buy it or rent an office space, then business use of the home is deductible. Home office deductions are reported on 8829. Calculation determined by square footage used regularly and exclusively for business. So if I have 1,000 foot, my home is 1,000 square feet, and the room I use for my office exclusively is 250 square feet, that'll be 25% business use of home. Direct expenses, so anything that is directly related to the business. So I buy a copier, scanner, all in one, and I use it only for business. That's 100% deductible. I buy a table for my desk. I buy a desk. But my utility is not 100% deductible. Indirect home expenses are deductible on a square footage basis. So if utilities were $500 this year and my business use of home was 10%, that'd be $50. Home office deduction is limited to business income. In order to have a home office deduction, you are limited. So if I only made $1,000 in my business, I'm limited to that. Order of deduction. So first you make the income or revenue, then you reduce the revenue by expenses, and then you would take business use of insurance, utilities, and then depreciation. Bad debts can be deducted as ordinary business expenses if they incurred in a business. Bad debts can be partially worthless or completely worthless. Business casualty losses. Receive an ordinary loss, no limit, not limited by the 10% floor, like personal casualty losses are. So if it's a business casualty loss, there's a break-in at my business, then I'm not subject to the 10% AGI. When a business property is partially destroyed by a casualty, the loss is calculated by which of the following: decreasing the fair market value of the property, the adjusted basis, the lower of the decrease in fair market value, or the adjusted basis, or the adjusted basis of the property less 10%. It's the lower of the decrease in fair market value or the adjusted property basis. Now, sometimes people confuse self-employment with hobby. So, hobby losses. The expense is allowed to the extent of hobby income. 9 factors determine whether an activity is a hobby, and the burden of proof lies with the taxpayer. Order of expense deductions. Mortgage, interest, and taxes, hobby expenses that do not reduce basis, then depreciation. Education expense is deductible if it's for maintaining or improving the skills of the taxpayer. It meets the express requirements of the law or regulation for a job. Education expenses are not deductible if they cannot meet the minimum educational requirements for the employment, or it qualifies the taxpayer for a new trade or business. All of my money spent studying for the CPA exam, materials and all of that, it was going to qualify me for a new trade or business, therefore not deductible. So, self-employment tax. This consists of 2 parts. In 2012, they had reduced the Social Security tax to 10.4. Medicare was 2.9, so a total of 13.3%. Social Security limited to the first $110,100. So if I earn $200,000, I stop paying Social Security after $110,100. Medicare is not limited though. So that's the end of this part, and we are going to do an example of a tax return.